Well, welcome. In this video, we'll do a Bitcoin analysis based on where we're at within the current third crisis. First up, what I'll say is I know I haven't posted videos in quite a while. This next week, I'll probably post an update on kind of where I'm at health-wise, also kind of where things are going as far as future training that's going to be released. And I have about 7 or 10 indicators that I've been outlining that I want to get released. So I'm not sure on the timeline on that, but those will be released hopefully for members. At a minimum, I think it'll be 3 or 4. I'll probably whittle it down to 3 or 4. But in this video, let's cover Bitcoin. We'll cover kind of where we're currently at. We'll look at what was right in kind of my initial prediction of the third crisis, where we're at, and what we can do from here. So first up, one thing I will mention is probably over 6 months ago, probably longer than that, I put together a series, Bitcoin analysis. This is, it's linked on my site. You'll see it linked down below in the description. This is a multi-series videos and also a kind of an extensive document. If we open this up, I'll just go through it just real briefly. An extensive document that goes through the first 2 crises of Bitcoin. We cover some of the technical analysis. I break that down. And then at the end, I go through, and I don't remember when I released this, but I go through what we're currently living through right now, the third crisis of Bitcoin. I talk about kind of where we're at with that, what to look for, some of the numbers, some of the raw statistics that went into the technical analysis and everything else. So if you haven't checked that out, you'll definitely want to check that out. It's linked down below. So let's jump into the charts. We're looking at the daily chart on Bitcoin USD. We're looking at the total chart, the complete historical chart of Bitcoin that is available on TradingView. The first thing to mention is that, of course, there was the final test of the RDA here back in November 22, the 5th of November 22. It did close above it. So that's something that actually for anybody that trades the Rexdog system should be mindful of. Of course, it did that back in June 22, and that really resulted in a kind of an overshoot and sell-off. The first thing to note is we were in a typical range or value channel range that Bitcoin gets in. This was 150 days. It was a negative 24%. It's really about 28% of a range that Bitcoin traded in, and then it gave that up just recently. The next thing to note, and I'm just going to go through key things. If you're new, definitely you can check out the document that I shared. If you're not in Discord, a lot of the things that I talk about here are just fundamentals of the trade system that I talk about on this YouTube channel. So these are all fundamentals. The other things you see on here are key levels. Right now we're below the June 2022 low, so that's where it's trading beyond. The one thing that could change the narrative of what I'm going to talk about here going forward is if we actually get a close above the momentum indicators and the RDA up here, and it starts trading up here above all these levels, that could change the narrative of what we're going to talk about here. So that's something to watch for. It's really close to being able to do that. We also have the mixed 200 average. So that's something to watch. This is another target area that if it does impulse up, let's say it does some type of, some kind of impulse up, maybe some news or something hits, and there is the narrative that the Bitcoin has hit its bottom, I would anticipate what you might see is it will flash up to maybe either the mixed 200 or above it, and then it'll probably fail back down to the levels we're going to talk about here in the remainder of this video. So that's a possibility. That's something to watch for. It might even be a good swing trade opportunity, especially if you see levels holding up on the best chart to trade, which is the 4-day chart. So that's something to be mindful of. And you notice the RDA on the 4-day chart is really aligning with this key level, as well as this 24,000 number. So that's definitely something you could watch for. I anticipate if it does that, it's still going to fail down to a lower level. So that's something that the chart is showing already. So it's already showing that. But that's something that you can look towards as far as this level test, this 200 mixed average test. Now, the next thing to talk about that is really interesting is if we actually, and one of the things, this chart is available to members. So this complete chart that has all these key levels, all the value channels and everything else is available to members. It's in the membership site in the link. If we look at the anchored VWAPs, now the reds are significant highs and the greens are significant lows. And one thing to note is in this last week, we've given up, or Bitcoin has given up, the last anchored VWAP from what I call the mass awareness high, which is the first time Bitcoin went up to $19,000. That's the mass awareness high. Before that, Bitcoin was kind of known, but it wasn't really taking the world by storm. Here is the mass awareness high. Pretty much the narrative, the fundamentals, the financial aspects, the allocation aspects changed when Bitcoin made its first run. And that's why we take the significant highs and significant lows from this period. And the thing to note is it's below all anchored VWAPs. That's something that's going to have to recapture. In the actual document, I talk about how really it's probably going to be difficult to onboard to Bitcoin in its next bull run. And I think this will play a role. I think these will all align in a way where it will be very challenging to onboard to Bitcoin at a good fill. So that's the next thing to note. And obviously these are resistance points as price comes up and tests these. So these are things that you'll definitely want to watch, these levels, especially if they align with other levels like this one here. The next thing we'll talk about is what's really interesting, and this is for people that have probably been with me from the beginning, is that we have evidence of stopping volume right here. This November 10th, is that? Or November 9th is evidence of stopping volume. You see that volume level here, right around here? Well, the last time that we saw a volume at that level, even kind of close to it, was this day here, back in May 19th, 21. And you notice, while it did sell off more, it did hit some lows. What ultimately ended up happening is that it used that low and that stopping volume to actually go out and take out the previous high and create a new all-time high. So that's something that you probably should put in the back of your Bitcoin analysis and say, wait, the last time, there's another time here where there was stopping volume on Bitcoin here. This was at a top, but ultimately look at the response to that. And this is something this is the only time I look at volume nowadays, is just looking for evidence of stopping volume. And then it's not necessarily the stopping volume, it's for every action there's a reaction. Well, with stopping volume of significant levels, you're looking for that reaction. And that reaction is typically anywhere from 7 to 14 days, maybe 21 days. It all depends. It depends on the market, depends on the ticker. For Bitcoin, it typically is relatively quick. It typically takes out a low and then it goes. And then it goes parabolic. That's typically what happens with this stopping volume on Bitcoin. And we can just see it on two cases previously, where we have stopping volume here. It went down. And what did it do? It went down, hit the RDA, and then came back up. So here was an uncertain time. It went down, created a low. It kind of ranged for a while below the RDA, and then it took out this previous low. From there, it created a level, and then it went out and took out the RDA, changed momentum, and then went out and took out the all-time high and created a new all-time high. So if you use this same model, just these two examples, and two examples isn't enough, but if you go back historically within the Bitcoin chart, it follows this kind of stopping volume model. If you outlay this, what you would expect to see would be something of the same. You're going to have probably a new low created. It's going to then come up. It might take out the RDA, but then it might sell off, might take out the other low, and then if it follows the typical pattern, you're going to see a parabolic move up. Now, this could be anywhere from, it might be weeks, it could be months, but that is the model that typically when you see stopping volume like this on Bitcoin, you're going to see a reaction within 21 days. So that's something to watch for here in the next 21 days, especially as we go into, I'm recording this in the end of November of 2022. So as we go into the holiday season and the new year, it'll be interesting where Bitcoin would like to close the year. So that's something to watch. Does it want to close it within a low, or does it want to close it within a high range that earmarks that it probably is setting up for the next parabolic move or the next value channel higher. The final thing we'll talk about is, let's look left of the chart, and this is where we'll end up here. So one thing, if we turn on our key levels here and we look at our key levels, we have a couple things that I've discussed in the crisis documents. We have the December 2017 close, which it hasn't taken out. We have the 12K, this is crisis 2, the range high. So we really have a area here of, I won't say liquidity, an area here of importance that the chart has told us previously based on the previous crises of Bitcoin. So that's an area we should be looking towards. If we look towards the left of the chart, and let's just see if we can find something interesting here. Let's start with the 4-day chart. And let's just go off what should be the obvious thing you should do when you're looking at, okay, from here, it looks like it's pretty apparent that we have, first up, an inflection level right here. For those that are in my training or in the membership, inflection levels are something that you watch because inflection levels are remembered. They're usually great trade areas. They're great swing trade areas. And we can just see here, this inflection area, well, while it took 2 years to get there, if you would have looked left on the chart, you'll see that this would have been a great swing trade area. You know, it's probably, I don't know what the actual amount is here, but it would have been a 41%, or let's say 40% trade on a swing trade within probably anywhere from 3 to 12 days. So that's a pretty decent swing trade just by looking at inflection areas on the chart. And in the training, I go through specifically how you measure inflection areas and how you know that they're important. This one is of significance. So it already did the reaction. So the first reaction is always the best. So if you missed it, you missed it. Now, once it's given it up, it's no longer important. I mean, it still does have importance, but it's no longer important. But the first thing you probably should look at, and probably the most important aspect when you're looking at, okay, it looks like Bitcoin wants to tag somewhere lower, is you're going to look at value channels. And probably the best thing to do is, we're using the 4-day chart, is we're just going to outline this value channel right here. We're just going to look at this here. And that's not the tool I wanted to use. I wanted to use the actual Fibonacci retracement. So we'll go here, outline this value channel with excess. There's more lower excess than there is upper excess, but that's fine. We're not going to be exact here. I just want to go through this here. So we've got this value channel of a traded range from June 19th to October 20th. This is the official end of what would be the second crisis here. So it's also an important level. This is also, so these levels here are already of significance. What we see here, though, is that right at the middle of that range is right around this 92 to 9,500 level. So if I look at this and what the chart is saying, is I would expect within the next couple weeks, if it does go down and want to tag a level, I would expect it's going to probably tag this level down here. It's probably going to tag somewhere between 9,600 and 8,800 is probably what it's going to do. So it's going to probably come down and tag this level. Ideally, we don't, for a good bull run, for it to set up what will become the next new all-time high, and it could be 1 to, I don't know, 10 years, who knows, with Bitcoin. But for it to set that up, it can't stay down here that long. I mean, it can, but ideally it would tag this level and it would protect this level 1 or 2 times. And then it would come up and just trade within this very uncomfortable range, because it'll be very uncomfortable. If what Bitcoin does is actually comes down here and tags, like in this range here, and then it doesn't make a bold statement, maybe it does protect it, but it comes up here and it kind of plays around, and it does this for maybe 150 days. And it plays around within this kind of this inflection point here of 18,000 and let's say 12,000. If it just plays around within this level here, it'll be very uncomfortable for that period of time. because it's at a multiple of the all-time highs. So it's still not showing any signs, although it's still alive. It's still close enough where a lot of people will not want to allocate any funds, because we have the 5K level, the 3K level, and we have anything below 10. So if it gives up 10, that's going to be something that just most people won't be able to fathom it getting beyond 10. It's just it's my opinion, but I believe that most people will not be able to fathom it getting beyond 10 and being something that will get to an all-time high. Although Bitcoin has proved time and time again, if you just go back in the historical charts, it does these type of things. Like here, it'll be, if you haven't watched my series, this is why, I could go off on a tangent here, but I cover all this in that document in the series, so I'm not going to go back over it. So if you're really interested, I'm not going to go back over. I'm just going to end the video here. So this is what I'm anticipating. I'm anticipating this type of move down to here, and I'm anticipating it to trade in kind of this uncomfortable range that it won't make sense to allocate capital to, because there's a possibility that it still might hit a lower level where you can get a better dollar cost average if you are able to get filled. And then eventually it's going to do, and I'll just end with this, eventually it's going to do something like this. And it's going to do it in a way where you won't be able to onboard into Bitcoin. The average person won't be able to onboard into Bitcoin reliably. And I think that'll probably happen when the official regulation for the overall crypto market gets finalized, both in laws in the United States as well as gets finalized in case law. We've got the Ripple lawsuit. We obviously have the FTX stuff, which we won't even get into that. But that has to be kind of like figured out as far as like, okay, what's the fallout from that? And then finally, the regulation, and when cryptocurrencies become known as probably securities, Bitcoin will stand alone as far as building from the ashes of what comes next. I'm also working on a post. Probably should have mentioned this before. This post will be released in the next week. It's real lessons from the .com era you can apply to Bitcoin and crypto. I started my professional career in the .com era. I go through this. I go through, kind of the opportunity, what to look for. This will be a post that'll be released here in the next week. So, and then I have books to read and kind of ways to look at it and ways to find opportunities for what will be the ashes of the crypto market, and lessons learned from both the .com era and the 2008 crash. So these are a lot of lessons that I lived through personally that I think you can apply to what will come from the next iteration of wherever things land. I think one thing's apparent, and I'll leave you just with this, is that Bitcoin is a commodity, and I don't think Ethereum, it'll be interesting to see where Ethereum lands, because I don't think that they want to destroy it. But Ethereum is more of a security compared to all these other crypto assets. So I don't see how they can release legislation and rulings and the overriding bodies can say, well, Bitcoin's a commodity. It's a sole commodity. Maybe there's a couple other cryptos that weren't pre-mined that fit the commodity role as well. But then how do you separate Ethereum out of all the other crypto assets that basically fit the Ethereum model? And that makes Ethereum a security. So does that mean just somehow going forward, they say, okay, whatever's in the past, we'll forget about, but going forward, it needs to be treated like this? I don't know. So we'll see. But I think that will trigger a series of events that will then make it apparent Bitcoin's role in financial allocation, when you look at, equities, gold, real estate, and then crypto, Bitcoin will be in that allocation model. It might only be 2%, but it'll be a 2 to 10% allocation model, depending on how aggressive you want to be within the space. And then there'll be as crypto comes from the ashes, there'll be other crypto opportunities that will fit into that 2 to 10% allocation that family offices and investors will look at when they look at allocating their capital for wealth protection and growth. So that's what I would suggest. Once again, I'll do an update on on kind of where things are going here. If you haven't joined Discord, you'll see a link down below. And I look forward to seeing you in the next video.